we wanted to focus. You can see how even in this graph, spike is something that we haven't seen for the past 25 years. And when you particularly look at this event, the cause for maybe concern for some of us is that the source of this uncertainty lies in something that we interact with, which is trade policy, right? This is not something like a pandemic, which is external. This is inherently based on how the trade regime functions. And the context is that for the past 30 years or so, the fundamental focus of the global trade regime has been to make it rules-based, predictable, reduce barriers, make international trade easier. But of course, in the past couple of years, ever since, we have seen trade tensions arising between US and China, we have seen some level of fragmentation of international trade. And from this emerged this new idea or a new focus on looking at how trade policy can cause uncertainty. So what does trade policy uncertainty mean? That's the lack of predictability surrounding governmental decisions or regulations or actions regarding their individual or maybe even regional international trade. Of course, we have had several studies which have taken a look at how trade policy uncertainty can affect exporters and businesses at large. But naturally, what happened since April 2nd and thereafter is a considerable spike in trade policy uncertainty. So the quote that I have included below shows that nearly 97% of chief economists that were surveyed by the World Economic Forum consider trade policy as the area of highest uncertainty. And this is really the context motivated us to look at how tariff rate might be applied, how this period of uncertainty and the surrounding environment itself can create impacts on exporters and particularly Sri Lankan exporters. So when we think about the possible dimensions of the impact, and this is something that we developed based on conversations that we have had before the survey and also general literature on the subject, there can be many different ways in which trade policy uncertainty can affect exporters. It can be access to finance or challenges in accessing to finance. It can be contractual or legal risks. It can be uncertainty around how the demand side functions, so buyer behavior. It can be delays on investment into innovation and new product development. It can cause pressure on diversification, particularly when it comes to entering new markets and the costs associated with it. There can be direct market access, price and margin-based effects. Supply chains can get disrupted, reconfigured, and it can also affect investment and capex decision making. So there are so many different dimensions, and that is why we thought it will be interesting and also pertinent to ask Sri Lankan exporters when this period of uncertainty was going on, what they experienced and how they responded. So just to give a bit of overview on the survey itself. So we wanted to understand how senior leaders in export or export-oriented firms perceived the period, how they perceived the impacts, and how that changed as the announcement, because you had the April 2nd announcement, time we heard of specific tariffs, but then there were updates, particularly the 9th July update. So our target population, of course, were senior leaders, decision makers in export-oriented firms. We conducted this survey between July 18th and August 2nd. And the number of respondents that we got were 37. So something that I want to kind of clarify here is that our objective here wasn't to make generalizable claims on how Sri Lankan exporters reacted or how specific sectors reacted. Our sampling strategy was not looking at something like that. We wanted to focus on how individual perceptions were changing. So this is very much a first look into until uncertainty developed. So focusing on who the respondents were. So we had the majority of respondents were exporters who exported to the US, but we also had a considerable amount of exporters who either in addition to US or exclusively exported to EU, Middle East, and as you can see from this chart, we have a range of other destinations as well. When it came to the sectors, the apparel and textile sector presented, and then we had a range of other sectors. And finally, when it comes to the size of the firms, most of the respondents came from firms that were either middle or on the larger end of the spectrum. So moving on into findings. So the first was, to what extent did trade policy uncertainty affect Sri Lankan exporters? So of course, as you can see from these two graphs, it did affect, but in varying degrees. So you see that in the middle, if you take a look at the left, the color represents those who are moderately affected. And then you have the range going to very badly affected. So yes, Sri Lankan exporters were affected, but that differed on different factors. And two more points that I would like to highlight is that firstly, it wasn't only those who exported to the US who got affected by trade policy uncertainty. As you can see from different types of graphs, you have the triangular one, and then you have the more, I think it's more the curved graph. What you can see is that both those who exported to the US and who didn't export to the US got affected by trade policy uncertainty. And the second was that it is not only purely the fact that you exported to the US was not the only reason as to why you were exposed. So there were certain firms who exported to the US, but felt that they did not get affected by trade policy uncertainty. As you can see from the two yellow bars, what you can see is that they haven't exported to the US, they have exported to the US, but then both those categories be impacted by trade policy uncertainty. So that really suggests that it's not just the determinant is not just the fact that you exported or not. There are other factors in play. So the second question is, how much time did they spend on crisis management? Because when we were formulating the survey, we expected generally that, okay, there must be a lot of focus on immediate crisis management, particularly because we asked these questions when the period was completely uncertain. But what we saw from the survey is something quite different. Yes, you do have firms who have spent entirely focusing on immediate crisis management, particularly the export leaders, but also you see taking a more balanced balancing firefighting in the short term with also looking at medium-term strategy and initiatives. And something that we seem to see is that relatively smaller firms are engaged more in firefighting, while you see the more larger firms taking, or at least balancing firefighting with more medium-term concerns. So did orders from the US immediately reduce? And the story is quite complex. When you look at the left-hand side of this slide, when you look at the first graph, that shows right after the announcement on the 2nd April, how did the exporters or the respondents see their buyers' behavior change? So when you look at the responses, you see that there has been considerable uncertainty, but not all firms have experienced immediate cancellation or postponement of orders. So though the survey, of course, even though it didn't go in specific detail, what you can see here is that the exporters that seem to have faced immediate cancellation or postponement seem to be coming from more agriculture-based sectors. We didn't have a single apparel sector-based exporter who faced immediate cancellation or postponement. And then when we had interviews with some of these exporters, something that an apparel exporter said was that, yes, even though the larger players may not have faced immediate cancellation, the smaller players might have. So it's not purely based on your sector, but also there are factors like the mobility of factors, the size of the firm itself, and so on. So that is immediately after the 2nd April announcement. When we shift to the 9th July announcement, something that we asked was, did things get better or clearer? And the majority seemed to think no. Uncertainty kept persisting. Some firms experienced some clarity, but no certainty, but the majority were uncertain. So the situation did not change after July. Talking about the cost increases in particular, so here we are focusing on the firms or the exporters who engage with US buyers. What we were initially considering is, did all buyers expect the cost to be entirely borne by the exporters? Once again, the picture is a bit more complex. You see that some have experienced burden sharing. It might be even or it might be uneven. There was one the buyers expect stopped, but the majority seem to experience a variety depending on the type of buyer. And the quote here kind of highlights that they have been certain. So this was an agricultural exporter, and they were talking about how already, even though cancellations weren't expected, the buyers expected to have conversations on how those margins can be borne in the future. And particularly here, they are expecting cuts and inefficiencies to balance the costing. But what I would like to emphasize here is that at this point, the only tariff that was applicable was the 10% universal tariff. So the cost increase that we were talking about was that 10% cost increase. Something that the interviewers emphasized was that if at the event there was another additional specific tariff, if such a tariff was imposed, then the situation might be different. And that's the situation that we are dealing with at the present moment. That's something that we can speak about more in the panel discussion as well. What actions have exporters taken as a response? So once again, we were thinking, okay, it might be majoritarily looking at pricing changes and talking about margin loss and maybe complete margin loss. But once again, the situation is quite different. Exporters have taken different actions and responses based on the context that they're dealing with. If you look at it, most have actually immediately absorbed margin loss. They have absorbed some, but prices. But then there have been quite a number of exporters that have established internal teams to start tracking the developments and then inform their strategy. Some exporters have then gone into more fundamental changes, like shifting production into other locations with lower tariff rates to the US. And some also looking at market diversification. Some have lobbied for the government. And some have reduced production quantities. So the story here is that the responses have been varied. And that's something that is also something that stood out to us during the survey. So what did the exporters expect from the government? Different things, actually. So, of course, there was a big focus on negotiating a better tariff rate, at least relatively better to the competitors. But also there was a big focus on obtaining more information and awareness of the ongoing trade policy developments. And that's something that exporters stress. They would like to have more information. And related to that is also having access to trade and legal experts and forecasting tools. And there was also an expectation by some on fiscal and non-fiscal support, but that is something that the government might not be able to, of course, given the fiscal constraints as part of the IMF program and the general condition. But also there was a focus on medium-term reforms such as trade and competitiveness reforms and securing trade agreements. So that is, those are the findings from the survey. But of course, now there have been quite a few developments since then. So what has happened afterwards? Of course, on the 1st of August, right after the survey, there was a proposal that the specific tariff rate would be lowered from 30 to 20, which actually then became implemented on the 7th of August. And then another significant, of course, development was that on the 27th of August, there was a 50% specific tariff on India that became effective. And on the 29th, there was a US Court of Appeals ruling that these tariffs are illegal. So now the ruling is paused and the matter is expected to be taken up at the Supreme Court. So that's really what has happened since the survey. What has not happened yet? So these are some of the things that we thought and we expect to be priorities. So the first is, of course, signing a formal bilateral agreement between US and Sri Lanka on the understanding. That's not something that we haven't seen yet. Also, knowing or announcing what Sri Lanka has offered in return to secure the tariff reduction, then implementing complementary trade and investment policies to strengthen the export sector, and also improving trade facilitation and reducing body inefficiencies. So as soon as the Trump announcement was made at the start on the 2nd of April, we got together and then we did a paper which highlights 8 priority trade reforms. And the key message is that a lot of these reforms have in some shape or form been begun in the past couple of years. So it's not about reinventing the wheel, but actually figuring out why certain reforms didn't follow through, learning from it, and then actually seeing it through. So if you would like to read more about the priority trade reforms that we identified, you can scan the QR code on the bottom right of the screen. And if you would like to read more about the survey, this QR code will take you to our website, which will give you access to the full report, which has broader findings as well. And finally, CSFS worked on trade and competitiveness related issues and issues that are central to the Sri Lankan environment. So you see there's one report that we did on understanding the EU Green Deal and implications to exports, also understanding Sri Lanka's new investment law, and also looking at commercial diplomacy and how that could be a tool for the Sri Lankan foreign service sector to increase trade and investment reforms. So that is it from my end. Over to you, Avisha, and to Anushka for the panel discussion.
Thank you, Sanit, for that truly insightful presentation. Thank you, Sanit, for that truly insightful presentation. I am Bhagya Ratnayaka, Officer that manage events at AmCham. Now, to continue this conversation, we will shift from the data to first-hand experience. Our panel of leading exporters will discuss the challenges they have faced and how they have successfully navigated them. Please join me in welcoming our esteemed panelist, Mr. Abhishek Ambani, Director of Overseas Operations at Bhagawan Talawati, Ceylon, Mr. Pushpika Janadira, Managing Director of Dip Products PLC and Chairman of the Sri Lankan Association of Manufacturers and Exporters of Rubber Products.
Hi.
Mr. Ramesh Nanakkara, Senior Director and Country Head of Ansel Lanka and Ansel Textile Lanka.
Hi.
Mrs. Shahani Gomes, Head of Business Intelligence at MAS Holdings.
Hello, hi.
And finally, our moderator for today, Mr. Anushka Vijayasinghe, co-founder, director of CSF, and a member of the Governing Board and Monetary Policy Board at the Central Bank of Sri Lanka. Over to you.
Thank you very much. Thank you very much, Bhagya. Good afternoon, everyone. It's a pleasure to join all of you. I think what you've seen with the study and also the presentation that Senit made, we now have a fairly good sense of, in general, how heterogeneous the impacts have been and also the responses. And I think why we felt it was useful contribution was because there was a lot of very general rhetoric at either extreme, either that it's all doom and gloom and orders are being cancelled overnight, or a tendency to say that there haven't been much changes and Sri Lanka is resilient and our exporters are able to navigate. So, and all of you as business leaders on the panel, as well as many of you in the audience, know that the truth lies somewhere more in between. And I think what was interesting to us also is to the differences across sectors. Sometimes we tend to only focus a lot on the apparel industry. We hear that more in the news, but of course we know there are many other exporters who send Sri Lankan products to the US. So it was interesting to also look at some of these differences. What I propose we do in the next 25 to 30 minutes or so is to try and get now beyond what has been to more how it's going on right now and what is what is the current situation. So I'm going to start with one common opening question to all of our panelists. Maybe I'll start with Ramesh, then Pushpika, Abhishek, and Shehani. Very briefly, as you hear these results, do these findings resonate with you? Has your experience in the business or your sector that you're been different? And if you could add a little bit of perspective from your industry on what those impacts have been. We'll get to the strategies for overcoming and how those were different in the next round. But first, just to hear from each of you whether are these the impacts that you have felt, what you heard in the survey, or has the experience been a little different? So we'll start with Ramesh first. Thank you.
Yeah, I think, thanks, Anushka. So I think, yes, very much same, I would say, at the very beginning, because the company that I represent, or the industry that I represent, and so we do exports more than 100 million worth of goods to US alone. That is almost like 40% of our exports going to the US market. So it was actually a shocker at the very beginning when we heard it in April. So immediately the reaction now. AmCham's, the company that I represent, the slight manufacturing plants across multiple countries. So each country's had different tariff announcements on April 2nd, based on the policy that US adopted on April 2nd. So therefore, immediate reaction in such a supply chain footprint would be that how we gotta take the hello. Can you hear me?
Yes, Ramesh, go ahead.
How you redefine your supply chain, right? But then, of course, as we just heard the chronological order, how things went on, evolved, then it became more, I would say, unpredictable, because the reactions were quite different day by day, and it was almost so then, of course, the companies as like us, we started, okay, there cannot be immediate solutions for this because it's so volatile, and we stick to our normal way of working while we kept on lobbying the government, right? So therefore, that's how we can influence the government to do the best for the country, which will help eventually for all the exporters. So I think Pushpika and we all represent same industries. We went on for that, and so now the situation has been that yes, now we have seen some sort of a stability coming through, but of course, yes, subject to the court verdict we just heard a few days ago, and so now what we believe is that earlier, this tariff was not in the equation of the supply chain designing because we had many other factors to consider. But now this has come into the equation. So therefore, it is important that we consider that aspect as well when defining the supply chains and sourcing locations in our manufacturing environment. And accordingly, as a Sri Lankan exporter, of our as exporters to influence the government indirectly to how we could access this free trade access to multiple countries, so which will help us to leverage one country over the other, right? So that's the approach that we are currently following as a company.
Thank you, Ramesh. And I think your point about these strategies to expand markets and taking full use of existing free trade agreements and so on is something I'd like to come back also to. Maybe I'll go to, just to break up the sectoral, go to Abhishek first and then come to Pushpika. Abhishek, your view.
Sure. Thank you very much. I actually want to echo what Ramesh has said, that it's very important that we build a resilient supply chain at this time. So we are actually looking at forming JVs with companies in Kenya and India as well. So and via Dubai, so to re-export from those countries to kind of weather this storm. But we have found the US more focused on the price stability at this moment. So they are requesting us to maintain firm prices and for longer periods as well. Something that we are now re-exporting from Dubai as well to kind of benefit from the lower tariffs. Certificate of origin is a complex issue, so the US has now mandated that the origin has to be declared on each item, and so a certificate of origin has to be provided. So this is a challenging situation for us, but thankfully we are more. We have a bigger presence in Europe, so we are seeing that those orders have kind of increased as well, and this offset with the drop in volumes from the US orders. So that's what I'd like to add up that.
Yeah, very interesting. And I think this comes back to the point about the other markets and how Sri Lanka can balance that. I have a specific question, I think, also to Pushpika. Of course, same question in the sense that reflect on those findings and how much it resonates, but also given your dual role, both as a leading exporter, but also as the industry representative, what are your views about how this global environment now has changed and how your business and perhaps the sector writ large is navigating?
Thank you, Anushka. Thank you very much for the AmCham organizing this event. As previous speakers also mentioned, this was a real shock to the whole exporters because nobody expected at the very first announcement 44% tariff for Sri Lanka. But subsequently, when it adjusted to the 10%, I think more or less it settled. And the main focus of all our exporters was to get the maximum shipment to US as much as possible. Therefore, all the exporters were busy shipping, giving the priority for US, get the shipment as much as to the US to build the inventory because no one knew that what is going to happen with the real tariff going to announce. Then, if you come back to the strategy point of view, because actually I'm representing tire sector, we do 1.1 entire world. 30% is contributed to US. That is, US is one of the significant market where we couldn't drop at all at any reason. The exporters were trying their maximum effort to bring and keep the market as it is or still grow wherever possible in the US concern. Therefore, the lot of activities has been done. Even the negotiations as a strategic priority with the respective parties, even our customers, we were trying to give a maximum possible benefits where we can extend it. And the other side of actually it's a benefit, I can say that our products are not easily shifted or it cannot be shifted overnight. Most of the products are industrial based. Therefore, even to the buyer shifting products to one supplier to another supplier, it takes a couple of months due to the compliances and the complexity of the product. Therefore, that's became actually one of the positive things. Therefore, that's what we are always telling about the diversity. So the diversification and bringing the high value added product to the Sri Lankan basket, because that indirectly benefit for us to remain our customers even at an uncertainty in the US market at that point. Therefore, that strategy we wanted to further strengthen in moving forward. Therefore, that really benefited the exporter. Therefore, there are quite a lot of strategies even I can mention even later. Therefore, I believe in Sri Lankan exporters need to be driven with this strategies because we are not a volume manufacturer. We are not a low price manufacturer here. Therefore, we always need to think about high value added, not easy to shift it, due to uncertainties in any tariff, because these may come again and again, because this is not end of the tariff regime. There were maybe a lot of possibilities of coming this uncertainty again and again. As exporters, we have to think about how resilient, and how innovative we are catering to the future market as well.
Thank you, Pushpika. Some very important themes that we should pick up in a little bit around the strategies to be adopted. Shehani, we've spoken many times before, even in the early days of this trade policy uncertainty. So when you hear some of these results and you reflect on both, but also the large, are these some of the impacts you're seeing? How has those initial waves versus more now and looking in the immediate near term? What is it like? Thank
you. A great question. Thank you, Anushka. So I think you're right. I think the initial stages for us, the conundrum was really about interpreting and trying to figure out, what might be that long-term sort of path we're looking at from, the start of April when these announcements were first made to, I think, Sanit spoke about the July 9th milestone. So I think in our minds, we were just at first really trying to interpret the implications of this short to medium to long term. And I think that's more at a surface level, and it certainly did, cause quite a bit of uncertainty across the apparel value chain. But if you start sort of going a couple of levels deeper into the real dynamics of the apparel value chain, things start to sort of, look a little less clear, or, you're looking at a mixed bag of goodies. So, most of this uncertainty is really triggered at a consumer level. And I think if you look at the US is easily the single largest consumer market, and one of that's from an apparel side. And consumers, we see consumers like really across, that threefold really. The one type of consumer, they will defer purchasing when things are uncertain, and when the staples take the lead and they sort of deprioritize their discretionary items. Then you have the other type of consumer who will trade down, which sort of brings a lot of price pressure across all apparel categories. Then you have the other consumer who is completely sort of agnostic to anything that's going on from a macro perspective, and she will continue to purchase per usual. Now, these are the sort of signals that our brands pick up when they look at their assortment mix, their pricing strategies, and their sourcing as well. I think what we've seen is, particularly in categories where brands have a fair lock-in or they have a hook with the consumer, they will be very confident in how they navigate this space. They can pass on some of that impact back to the consumer and still maintain high market shares. So I'm moving from like macro to more like brand level strategy, because that is eventually the makeup that, really spells out your final narrative in a sense. So wherever there are like proprietary categories, and I heard some of the speakers speak to the fact that, we need to be in certain value added sort of sectors. So it is very much the equivalent of that. Wherever brands feel like they have a real foothold with the consumer, they will be okay to pass on some of that benefit. There is a large chunk of apparel that most of these apparel making countries make, basic sides, and Sri Lanka also has a fair share of that. In such categories where you have a huge amount of fragmentation across the spectrum, brands will be really conscious about passing on that impact. That's when you start really seeing this sort of conflict in terms of who's really going to pick up that cost. So if you look at what's happening, and that pressure is what gets seeped through to the apparel value chain or the manufacturing side of the business. And between April and maybe around August was the emergence of two corridors really. One, on the one end, we had the low tariff corridor and a high tariff corridor. Now with these basic programs, Anushka, I think what we will see is that, basics, essentials, low complexity programs, there is a good chance that over a time we will see migration to the low tariff corridor. But you have to wait and see, how the next 24 months go, what is the real tariff outlook, because I think some of the speakers also mentioned this. It's not easy to shift or switch. So you're not going to see very knee-jerk sort of shifts from brands either. They're very strategic about how they really partner manufacturers. So There's a lot beyond the tariffs that really matter to these brands when they sort of collaborate with manufacturers. But over a period of time, if we see this tariff look holding, there is a chance that brands may start pivoting to the low tariff corridor with some of their basics. And historically, the primary basis for all apparel categories have been Southeast Asia and South Asia. But something that could happen. I think I heard some of the speakers mention, the African bloc, the Central American bloc, these could eventually become primary bases for low complexity garments. I think where Sri Lanka has a niche and certainly has an edge would be in the more complexity program. How do we retain that and strengthen the ecosystem in a way where we zoom out of this tariff playbook into something a little more strategic from a trade lens, So I think I resonate with the Risa's absolute to medium long term. That's how we've sort of transitioned in terms of how we look at this space now.
Thanks, Shahani. Very, very interesting, nuanced look. I think we hear too often this apparel sector being talked about in a very homogeneous, generic way. So you brought that much needed nuance and practical view of it. I'm going to pick up on something you said and come back to it in a bit, which is around this. It's not a new topic. Sri Lanka needs to go in for niches, higher value, more innovative, more technical products. So I'll come to that. But very quickly, I want to pose a question to both Ramesh and Abhishek. Sorry, to Ramesh and Pushpika and Abhishek also. Firstly, to Ramesh and Abhishek, can you unpack for us a little bit more these demand side or buyer reactions to this increased uncertainty? Because technically, even up to today, there is still open uncertainty. There is no guarantee that this announced tariff unilaterally kind of house will be on paper. You don't know, what factors might influence a change some months from now for economic but also non-economic reasons. So can you share any insights on this demand side, the buyer reactions, and also since you're in markets outside of the US, any differences between the US market and non-US buyers, how they're reacting? So maybe first Ramesh and then Abhishek. If Pushpika wants to come in also, you can.
Yeah, thanks, Anushka. So I think the one example I can give, because we do supply gloves, mechanical gloves to one of our US largest customer, Amazon, right? I'm taking one example. And yes, there was immediate request. They were from Ansel, how we are going to redefine our supply chain network. In other words, they were hinting how they can nearshoring, or they can have whether we can have manufacturing in the US itself, just aligning with the government policies, US government policies. So, but as Pushpika correctly mentioned out, so some of these particular products that we do manufacture, it's not easy to shift, right? So it's a very heavy and very labor intensive industries that we talk about, and it's not replicable in US with the context that the dynamics they have, right? So that advantage we do have in a very big way. But having said that, now this tariff uniqueness is that yes, we export, but of course the US customer has to pay the tariff, right? So which will then pass the price back to the US customer. So yes, there was pressure. So how we can our export prices, FOB prices can be altered to absorb that. But of course, it plays where if you have a strong brand and how you have your product has a real true value proposition to the customers, then that's an advantage that we can play with, right? So in the market. So therefore, actually, from our side, we have to pass the first base tariff, 10% tariff in terms of pricing back to the US customers. We have to do that, right? That adoption took place with some of the exporters as well. Whenever you see your brand proposition is stronger, so that passes can happen. But however, it has a limit, so it can have a long-term impact of how they look at. So yes, actually, we those were one examples that how the market dynamics worked after this tariff reaction, and also as a supplier, how we reacted, because there were no immediate shifting of the demand, but of course we did move the price, right? Because we have to reflect the correct costing to make sure that the US customers will feel that. So that can happen, but of course it's not always. But if it has been 44%, I'm sure it would have been a challenge, right? But having said that, decent price increases will definitely pass through. But of course, that's not the way we should look at now, because these tariff formula now has come into the equation, and of course there is various other, because the main challenge as exporters we have is that the basis of this tariff is very controversial, as we all know, right? So therefore, sometimes for us to completely scientifically plan a response is quite difficult. So which is what we clearly feel. So that's why we see that how we can align not just the trade, but of course various other factors where US market is sensitive. I mean, US government is sensitive. That's where that we see as the main way forward in this kind of situations, how we manage these geopolitical dynamics and to influence and get these, as in the presentation we saw, what are those next steps as how we can deals in a more stronger way, so that can give clear that ambiguity or uncertainty on the horizon, right? So I think that's something we have as exporters. We should be working with the government, as Pushpika said, as industry chambers. We should be lobbying with the government.
Yeah, we're definitely going to come back on that also. Abhishek, just a quick view from you on the buyer side reactions. We also hear that some of the US buyers are also under pressure to not always pass on some of these tariff increases to the customer. There is pressures also from the US administration to not do that. There is some naming and shaming also going on if you do end up passing those prices on, to have to navigate that, and what are some of the buyer reactions had to navigate?
Good question. So on the buyer side, I mentioned before, we've had a slowdown in orders from the US. It's mainly because of the uncertainty. And typically our products are not just tea-based, it's tea with multi-ingredients. So we use a lot of herbals. We source herbals from Egypt, spices from India sometimes. So it's items from Africa as well. So the country of origin has been specified now, so that is going to be an impact. So this has resulted in a lot of these our customers, our buyers are a little bit hesitant, reluctant to place the orders at this time till there's some clarity on all of this. And we have found that compared to Europe, there's no slowdown in Europe. We've seen actually an increase in orders from Europe. So that is what I'd like to add on that.
Yeah, I think now it's good time to quickly shift the focus on the company strategies. And Abhishek also alluded to, looking at the other markets that might be a little more robust, a little more buoyant. From Pushpika first on the strategies that are being adopted by exporters. You see it not only in your company, but you have a view as an industry representative. You have a view of other players also in your industry. What are some of those strategies that companies are adopting? Is it mostly internal efficiency, cost cutting, innovation, or is it more trying to go and open up other markets, look at market diversification? What really are these company strategies that you can speak of, Pushpika?
Anushka, touching this the previous question as well about the order situation, because it's very interesting thing happening in US market right at the moment. This problem is very US citizen than us now, because they charge 20% us, from the rest of most of the countries, the tariff, the US local people has to pay that extra money to the government basically. Because basically little portion is absorbed by the suppliers, but majority is shifted to the market. As a result of that, US market is shrinking. The demand is there were the suppliers, even our customers, they were always saying that be ready for the lower volume, be ready for the lower demand, because it's happening in US. What happened the last couple of months, the people, some of the customers at the regime, at the tariff was maintaining at 10%, some of the people were accumulating the stocks, but some was not done. They were basically wait and see approach. There was now the competition in US among the supplier, the sellers, those who accumulated the stock at 10% tariff, and those who are going to buy the new products at the tariff of 20 or 30, whatever they are buying from the region. There's a competition. The other side of the story is for us, now we always compare more than the tariff, how the competition is going to play the game. Because this is comparatively how best we are compared to our competitor. I'm representing the tire and gloves, basically tire sector, the biggest competition came to Sri Lanka from Vietnam, Thailand, China and India. Basically, China and India right at the moment is at the little bit of a disadvantage for us, but Vietnam and Sri Lanka is almost a par. Therefore, we are competitively, we are better than the biggest competition coming from China and India. The glove side, we are competing with number one from Malaysia, China, Vietnam and story again. The competitive point of view, Sri Lanka not bad at all at this moment. But the demand may squeeze because of the local demand squeezing happening in US. The other story is the non-US, because the problem is with the US, the tariff related. But the non-US, the countries like China, countries like India, they're putting their maximum effort to capitalize on the market where this US tariff is not applicable. That is rest of the US countries. We are having a very, very high competition in Europe and rest of the regions in Asia even, because India and China is trying to capture the market where they are going to lose due to this tariff in US. Because that is the competition and the new challenge exporters are facing, while we are having a challenge from the USA side, and the new challenge is opening because of the two giants, India and China, is putting the pressure on the getting their lost market in US from the other regions. Then coming back to the strategy, what I see, as I told earlier, we are not a volume manufacturer. We are not a low price manufacturer. Therefore, we always think we have to go with the diversification is a number one strategy, and the agility of our strategies. We have seen all the crises, we have performed very well. Sri Lankan exporters, Sri Lankan businesses have thrived during even the crisis. Therefore, we have shown the resilience our businesses are. Therefore, that strategy, we have to be very resilient in all our strategic approach. Entire business value chain, I think we have to think about. From raw material sourcing, operational, and also to the distribution to the customer and even our customer base. Entire chain we have to relook at. Even the raw material, my sector today, we don't have a rubber in Sri Lanka to do our production. Our requirement is only 40% rubber requirement in Sri Lanka. 60% raw rubber we have to import from Thailand or Indonesia or Vietnam, because raw material availability is going to be a challenge. Therefore, it may be strategically we have to think the production locations. I'm not thinking about shifting from business Sri Lanka, but still, Sri Lankan owners are shifting and maximizing the value addition in some other country. It's a benefit to as a country. There was the supply chain, manufacturing, how we can bring the automation, how we can bring the novelty products into the market. Therefore, even the customers, we should not always depend on US. US, we have a 1/3 of the customer base, but what about the other countries? We export to China. Therefore, it's very difficult to export to China product like gloves, but we do. Therefore, we have to find a ways and means how we can capitalize the bigger market like India, China, and rest of the Asian countries. Therefore, first thing I'm always telling, be in the diversification, bring this entire value chain. It's not only one segment of the product. Second, very important is the collaboration and advocacy. We have seen during the tariff discussions, including the president of Sri Lanka to down the level, chambers, association, exporters, policymakers, everybody work together. And we have seen the aggressively how they worked, and we got a reasonably better rate today. We are par with the competition. And similarly, there are so many things coming in. Even SWAT going to be a very, very difficult thing for exporters. Because our fear is all these things may survive the big guys, may survive the giants, but what about the middle layer? What about the lower level exporters? Even the compliances coming in right now, EUDR, various compliances, very heavy cost. But the question is, these costs can be borne by small exporters, medium exporters, large exporters, multinational companies who are in here may be able to do. So this need to be think about, and strategically, even the policymakers need to be think about how support can be extended to those areas as well. The last one I want to tell, as I told earlier, we always perform in the crisis. Therefore, obviously the investors are asking, is it the right time to invest? Is it the right time to build the capacity? But I think we have to think about, because the future is going to open how best we are going to do the future present investment right at the moment. Therefore, we have to be very clever, identify the niche, identify the opportunities, keep on investing where the areas are going to open in future. Because our industry easily, we can't do the capacity enhancement easily. It takes minimum 6 to 8 months to ramp up the capacity in one level to another level, because it's such a highly sophisticated capacity enhancement process need to be done. Therefore, I think exporters need to think about how best they can think about the future proofing through investment as well. Thank you very much.
Thank you. Very, very insightful, Pushpika. I'm going to just pose that question to Shehani before we move on to the next question. So Shehani, same for you. What are you seeing as business strategies? And particularly, I have two things to ask. As a company that operates production facilities in multiple locations, how has this shifted how the business has to think about those? Because frankly, it's not only Sri Lanka that has been impacted by tariffs, it's other countries you operate in as well, whether it's Vietnam, whether it's all the way to Africa with the Trump administration essentially jettisoning AGOA, so Ethiopia and so on also facing similar issues. So that's the first part on the as a company having to these strategies around where to produce and export from. But also, since you have interactions at JAF at an industry level, you see this point that Pushpika brought out, the bigger players versus there's a long tail of apparel SMEs. What are you seeing there different about how their business strategies are?
Thank you, Anushka. So let me first part of your question. I think for us, it's almost business as usual, and that's the honest truth. Because I think what we now have is almost a trade 2.0 level playing field, where we have a higher rate of tariff, but most of our peers or closest competitors have also ended up with that same sort of rate. Our focus as an industry is going to be really about building those ecosystem lock-ins. And I think we heard most of the other speakers also speak to this. It's not really easy to replicate what we have. And the strategy is also to see how can we make it even harder to replicate. And for that, you build ecosystem links, you deepen your capabilities within those regions where you feel like you have a strong foothold, and build very meaningful verticals for your brand. Because I don't think we can look at tariffs in isolation. There are lots of other things that are really making this space quite busy. One of them is, the rapid digitization of the arrival of AI and the application of AI, especially in the consumer space, making it very easy for consumers to, look at a multiplicity of choices. So that also means we have to build the right level of resilience, rapid fulfillment type of models that this tend to sort of cater to those type of things. There's also the trade piece, transparency issues, where Sri Lanka has always maintained a fairly strong record. So we try not to look at what's going on the tariff side in isolation. We try to look at it a little more holistically in terms of how do we continue to create meaningful service models for our brands across core product verticals that we own. And I think that's really the focus, Anushka, and that will continue to be the focus, because it becomes so much harder for competitors to then take away your market share because you have a very proprietary claim in the products you create. And increasingly need to build that value. Look at more collaborative product frameworks, owning more of that capability share. So it becomes easier for brands to work with us, but it also means it becomes harder to disengage. So less transactional, more strategic, looking at ecosystem investments. That means investments into raw material, tier 1, tier 2, going beyond just the manufacture, going into fabric, going into yarn. We don't have a lot of yarn play here in Sri Lanka, which is really important, which is where most of fabric innovation takes place. Then even in terms of rapid fulfillment, how do we own chunks of that pie in a way that is meaningful? To your point on, we have a footprint beyond Sri Lanka, and it's very meaningfully carved out to service different customer and product verticals. And how do you build those rapid inventory models for brands to, they're building resilience. They're trying to kind of work within shorter lead times. This is an industry that's been, historically very comfortable with really long lead times, 18 months and beyond. We've now really cut short some of those lead times. So there's a lot of pivots that are up for grabs. How do we really create that right recipe that works for this country over here? But beyond just the country, as manufacturers with a multi-country footprint, how do we use our multi-country footprint as a superpower to make sure, you have a good mix of low complexity and high complexity products that are sort of, parked in different countries. So it becomes a very meaningful relationship with the brands that we work with. That's really very much the kind of the playbook we have for MAs and beyond MAs, like even for the apparel industry. And that's really widely spoken of, to see how we can kind of continue to gain. A quick point on what you brought up in terms of smaller players and larger players. I think there's a lot of opportunity for smaller players to collaborate with larger players because with a lot of uncertainty, what we're also seeing brands gravitating towards is stable relationships, stable long-term relationships that can help them to build that supply chain stability as well and help them to build that resilience that I spoke to earlier, rapid fulfillment. So as that happens, they will likely partner more and more with these larger manufacturers who have a great track record on the sustainability side, who have the muscle power to invest into digitization of supply chains and partner them on capability investments. So I think there is an opportunity for smaller and larger players to look at these collaborative frameworks and for smaller players to really leverage on the larger folks. So yeah.
Thank you. Thanks, Jehan. I think there's often a lot of doom and gloom about this differentiated impacts between SMEs and large firms, but you nicely showed how there is still some opportunity to utilize that full
Actually, that happens quite a bit in the industry right now, especially whenever there's a lull. I think small and larger players really do come together because smaller players also have a smaller cost base, which means even on like more price competitive categories, smaller players can support the larger players. So that's the reality too.
Great. I'm going to move to a question that has come through the chat, and I encourage others also. We don't have too much more time, so please put your questions into the chat. It's the most efficient way for us to take your questions. What are the roles and actions Sri Lankan government can take in reducing uncertainty for Sri Lankan exporters? Are there any ongoing discussions or MOUs or agreements? So I'm going to turn that over first to Ramesh and then to Abhishek. Pushpik already shared some of those insights, but we can also open it to Pushpik and Shahani. But primarily, Ramesh, Abhishek, your views on roles, actions, priority actions for the government to take to reduce this uncertainty and to support more resilience of these exporters. What kind of a role is there? We know, as Senit pointed out, other countries, I'm familiar with some of what other countries are doing. They're able to throw cash. They're able to do export incentives, performance-based export subsidies, various forms of other rebates, export rebates, human resource training rebates. We simply do not have the fiscal space to do that. So realistically, what are some of the roles or actions that the government could take? First,
Yeah, I
Ramesh,
think
then to Abhishek.
Yeah, Anshul, I think, yes, you are right. We do have the limitation, of course, government, especially with the current IMF agreement that the government is going through, the program the government is going through. But however, it does not stop us engaging with the government and lobbying, because we continue to have that dialogue with the government. One area we are actively encouraging the government is that we need to look at how we can further extend our value chain within the country. I mean, one fact that Pushpika brought out was on the raw material side, but I mean, there are so many ingredients that we are relying on imports, right? So how we can have further locative. Yes, we don't have the scale, I agree, but however, sometimes the raw material, we can be an exporter to other countries as well, right? We start the industry. So there are how the government can provide that space to attract those investments, right? So because typically if we go by the traditional industries that we have versus those additional value addition points, how to attract those investors. One example is I would like to highlight is that, for example, now latex as natural latex also we are importing, and more predominantly synthetic latex. That means the latex that are currently mostly used in mechanical as well as in surgical products are 100% imported. There's no local supply of that. So, but this is related to the petroleum byproducts. And we are currently, government is looking at a huge investment in Hambantota for oil refinery. So how we can further encourage investment in that space so that the synthetic latex can be manufactured within the country. So these are some of these suggestions we are lobbying with the government to ensure that we strengthen our supply chain footprint beyond the final finished products and those ingredient manufacturing within the country. So this will definitely give us a boost, give us help to, because at the end of the day, where US is currently looking at the country of origin, right? Sometimes, sometimes some countries might chain to Sri Lanka, so then they can capitalize on these opportunities that we have to offer as a country. So I think we need to look into that. And the other important aspect is, of course, the capability development, because if we are to operate in that niche market where specialization, so there are certain technical capabilities that we need to develop within the country in terms of people capabilities and also other digital infrastructure capabilities. So I think these are other areas where government can actively involve, which will be beneficial for the industries that are in. And of course, yes, incentives, because we see all our neighboring countries, if we say India, Vietnam, what sort of incentives they are giving their investors. But unfortunately, we are cut off to almost zero at this moment, right? Because of the certain conditions of the arrangement that we are as a country, we are in with IMF. But however, I don't think that's going to last long, because if other countries nearby are attracting investments, and because we are also working on to attract the foreign direct investments to the country, and also even the current exporters, if they want to expand, what is that value compelling need that the government of Sri Lanka is offering against the other peers? We have to have that compelling story for us to lobby, even as an MNC, to attract those investments to the country, because otherwise we have other options. We have factory footprints in other countries. Why Sri Lanka, right? So yes, we currently have that advantage, but whether it's going to last long is a question. Unless we evolve pace, attracting, giving those incentives. Not always tax holidays or anything. There's so many other basket of things that we can do as a government. So that's where we are as industry. We are lobbying and we are engaging with the government and giving that visibility, because those are the ingredients that we can play with. Yeah.
Thanks, Ramesh. All very important points. I think I'll just go to Abhishek only on this question. Again, roles, actions the Sri Lankan government can take either to reduce the effects of the trade policy uncertainty and what is that?
I think Ramesh mentioned everything that was that the government could actually play. I think one thing that we could add on maybe is we could probably try to focus on new markets where the high tariff barriers are not so high. So we could look at maybe China, India as well. So Asian markets, I think those are some markets that we should look at maybe having some kind of free trade agreements with them, so that we could kind of hedge our risk, not rely on the US too much. We don't see the tariffs coming down, at least for the next year or so.
Exactly. And thank you, because I think this is an agenda that Sri Lanka, compared to some of our competitors, have been much slower at. We've actually neglected this East Asia integration. There is a growing consumer market, a growing middle class, a growing industrial demand. So absolutely right. I'm going to turn to Pushpika to try and respond to this question that has been posted on the chat. Do we focus short-term market access while overlooking the erosion of long-term investor confidence caused by trade policy uncertainty? Any reaction to that, Pushpika, or any of the other panelists?
Anushka, now as for the question, we focus on too much on short. No, actually, we are not focusing on too much because most of the exporters are working with the well-developed markets, and our competition with the very bigger countries like China, India, an aggressive market. Therefore, I don't think any investor, any exporter can just work on the short-term plans, because it's a very, very long-term plans everybody working on. Therefore, trade policy is uncertainty. Yes, I think it's one of the factor Sri Lankan government has to think about as a sustainable initiative for a long-term sustainability, because we always tell into the government that don't look at these are as a businesses. Now, some of the things like even rubber industry, we are working with 300,000 people with the rural family engaged in the rubber farming. These economies, what we export today, what we bring in the dollars, we are ensuring which are flow into the rural economy as well. There was quite a lot of engagement with the rural economy, rural farmers. This is the area need to be very, very comprehensively look at from the as well. There were the recent issues are coming in SWAT. It's okay if the government is going to walk the talk and pay the rebates, pay the refunds as agreed. If not, there will be a massive cash flow issues going to pop up in the exporters. And today, exporters are paying 30% income tax, which is equal for the other corporates. But export normal business where we are competing in Sri Lanka, there's a massive amount of investment need to be done every year to upgrade the system, upgrade the technology, upgrade the machinery. Therefore, these investments are going to depending on how much we are earning. Therefore, these investments going to erode due to how high taxes. There was a government, we are always pushing to think about that aspect as well. And most of the small scale, medium scale exporters today facing certifications, compliances, which are very highly cost, especially US and Europe. If anybody export, the compliances are massive. Therefore, there should be a think about the innovative way of supporting, bringing the certification bodies into Sri Lanka, investing, do the necessary certification at a lowest possible cost. There were these things. We don't ask government to throw money on giving any rebate, because we know that we understand the government situation as well. The IMF they're tied up with IMF issues as well. But there has to be a kind of a long-term sustainability model need to be implemented, because we don't have a national policy on that, tell you very frankly. And about the investment, FDIs, if you want to attract the FDI, we should ensure our raw material availability, as Ramesh said, energy, how competitive we are with the region, and infrastructure development. Therefore, these things are going to tie up with the long-term thinking and the long-term sustainability, and also the long-term market searching and attracting the market. Because though we don't think about, our customers are coming and doing the audit, and they do strategically evaluating Sri Lanka as a destination for a long-term business development. Therefore, they are very smart. They want to look at. Now, even India, I can tell you example, due to the US tariff wrap up to 50, what India immediately took a decision, most of the exporters, they allowed to sell in the local market, because then they are not hampered because of the tariff, because they have a free market in the local. They can now at least minimize the damage which caused due to this tariff. That's what we are telling. Government should be very, very active, very, very proactive, especially expert coming in this time is going to be another disaster. Therefore, these kind of a strategic thing need to be think about long-term sustainability and development of our industry. Then definitely exporters will go one step ahead and find the markets where we can really bring the business to Sri Lanka. Thank you.
Thanks, Pushpik. I'm glad you also mentioned this testing and certification, because that I think while bigger players might be able to absorb some of those, I think if we really want the medium-sized firms, maybe small will be hard, but medium-sized firms to get to the next level, this, the cost of sending samples to Singapore testing labs and so on, we really need to look at that as part of having those capabilities here, or ability to reduce those costs for Sri Lankan firms. We are running out of time, so I want to pose this last question to Shehani. I know you mentioned a little bit on this focus on innovation and regional partnerships and that ecosystem, but I want you to reflect specifically on, okay, it's nice to say this. We've heard today a lot about how Sri Lanka has to go up the value chain and go into niches, making it harder to remove Sri Lanka from that value chain, give the buyer more reason. And innovation is a big part of that. The company you represent has been, of course, a pioneer in it, but I'm trying to understand do we still have those capabilities to do? It's no longer just us that's doing digitalization in these supply chains. It's no longer just us. Some of the other formerly cheaper manufacturing locations are also doing this. So my question is, how are these question from the chat, how are these leading Sri Lankan exporters adapting their long-term strategies in areas like product innovation, digitalization, and so on, realistically? And is it only one or two lead firms, or do we actually have the ability to take this as a emerging strategy for resilience?
So I think that last piece is the one I would try and put focus on. It's a really great question, Anushka. And I think, yes, MS has pioneered this. We've also seen other larger players within the apparel value chain in Sri Lanka taking a very proactive sort of stance on really building that product innovation muscle. And it takes a lot. And I'll tell you what really works for us is the fact that we have one of the foremost universities here churning out some great talent, University of Moratuwa, on the technical skill side. And that's a huge base that really, churns out the right skill set. Beyond that, the kind of categories that Sri Lanka typically has played in are high complexity categories, which means we have a base here. But what we've also seen through some of the turbulence that I think Senate spoke to, at a country level, has also led to a huge brain drain, like losing some of this technical muscle to some of our competing markets, particularly to Bangladesh. So now how do we retain that talent and have a very cohesive country level strategy? And that has to be perhaps an area that at a country level, there has to be a little more convergence, and alignment. But I have to say the larger players have consciously invested, I think, at the risk of losing short-term profits, really for those long-term gains, long-term brand lock-ins, invested into specific capabilities that we know that will help us to stay. That's always been the focus for the larger players. It's not an easy space. We have the likes of Vietnam to China, some of those larger players, and I think some of the other speakers also spoke to this about government level incentives. So in China, most of our close peers end up with some great incentives. How do we create those incentivized structures and build a real resilience strategy that helps us to build certain capabilities that can help us to kind of lock in product verticals? And I think that's really, we've seen most manufacturers, the larger ones, Brandix to Hydromani to the bigger players, really investing into those high complexity programs because they can see, because of our volume being smaller compared to Bangladesh, China, Vietnam, which are fairly large markets, volume play wise. Lock-in is really in building that product innovation muscle. So there has been a lot and a conscious bit of investment in creating that. I think from a policy stance, how we link this product innovation conversation back to the trade policy conversation is, it takes me back to what I mentioned right at the start, Anushka, about we need to zoom out of this kind of tariff traffic and look at maybe creating those bilateral lanes that will help us to build that clarity or predictability for investment. And I think that's a big one. And I think, and I'll bring you a nice example from our block. We can see Kenya really pivoting towards a bilateral agreement now and really kind of, going down that path and exploring it at least. And I think if we can build that kind of policy certainty or some sort of long-term predictability for investments to come in, for raw material investments to yarn investment, that's where most of this, capability building happens or product innovation happens. So I think at a policy level, creating those pathways will be incredibly helpful to bring in the right partners from a financial and investment side as well. But yeah, there's a lot of work that's been happening, and that's been an area that the Sri Lankan apparel industry has been very passionately involved in, and a lot of talent investment into that.
Thank you. From starting off today's session with a presentation by Senith on a look at the impacts and trying to unpack the differentiated impacts, I think we got the conversation to a point where there's really a lot being said about some of the strategies, whether it's at a company level or at a country level. For me, I'm sure there are many takeaways that you would have, many of you in the audience might have. For me, some of it is this level, this building that stickiness with the buyers that is becoming much more important than before, because we are not the cheapest location. We are not both from a labor and input cost point of view. Also the ecosystems, as Shihani brought out, really building that out, and the piece on innovation and looking to add value. On the government side, I think we heard some very practical recommendations, both some which are industry specific, like in the case of rubber, about looking at that value chain and what the backward linkages might need to be, but also more at a policy level, like re-looking at our trade agreements profile and the focus on some of the important bilateral relationships, both with markets like the US and the EU, where we are currently big, but also in emerging important ones in East Asia. So I won't try and attempt to wrap up anymore or provide too much more of a summary. It was an extremely rich discussion. I want to thank Ramesh, Pushpika, Abhishek, Shehani for your very insightful comments that brought the insights to life and take the conversation beyond the study that we did. And I want to hand over to Nilika to wrap up and give the vote of thanks. So thank you very much. And thank you to AmCham for partnering with the Center for a Smart Future on this webinar.
Thank you,
Thank you.
Anushka. Good evening, ladies and gentlemen. I'm not going to take too much of your time, but I would like, if everyone is okay and they can switch on their cameras, we would like to take a couple of screenshots. So when Anushka reached out and requested to share this survey with our members, we didn't expect such a intense response, to be honest. So I'm truly thankful to the CSF for initiating this survey and for so generously sharing the responses with our members and partners. And a special thank you to you, Anushka, for collaborating with us and moderating today's discussion. And of course, to Senith for his insightful presentation on the survey findings. My sincere appreciation goes to our esteemed panelists, Abhishek, Pushpika, Ramesh, and Shehani, for sharing your valuable perspectives and experiences. Finally, a big thank you to all our participants for your engagement and presence this evening. Your continued support is what makes these conversations meaningful, and of course to my team at AmCham for putting this together. Avisha, Venuk, Krishnika, Shira, Anudi, thank you so much for your contribution to make this happen together with CFS today. So thank you, and we wish you all a very pleasant evening.
Thank you.
Thank you very much.
Thank you very much.
Thank you. Bye.
Thank you. Bye-bye.